Hello guys, hello again with us. In today's video, as you already read in the title, we're gonna try to understand how to read or how to get informations, how to know some stuffs from Japanese candles. Japanese candles are this one in front of you here in the chart. As you see here, it's this one red and green as you see here. Of course, here in trading view, if you come here, we can choose. It's just here we can choose how to see or how to represent the chart in front of us. There is many types as candles we're gonna talk about today. There is also columns. Let me see, columns. It's this type, just like columns, always red and green. There is also let me see the line. As you see here, it's just a line, and many others as you see. But for us, and the most important thing is the most important thing that you should understand and know how to read is the Japanese candlesticks. It's Japanese candles, as you see here, and you're gonna know why it's so important. Before I start, I want to share and I want to say something is about the colors that you see here. They are not very important. You can set any colors you want, but just I prefer red and green. Red is for negative. It's for negative candles, and the green is for positive ones. So let's start. The first observation that you see when here, for me, the first observation that is there is some candles. There is big ones as you see here in this one. It's a big candle. Also there is small ones here as you see. There is small candles. There is some that have a big shadow here. Look at this one here. Have a big shadow or wick, and there is some ones that don't have any, as this one here. I'm gonna explain this type in this video. Don't be scared. I'm gonna explain everything. So the first thing to understand is let me open this image here. In a green candle, as you see here, the opening is in the low of the candles. That's called the body, as you see. In this one here is the wick or the shadow. In a green candle, the opening is here, and the closing of the candle is in the high of the body, while the opening is in the low of the body. Otherwise, or the opposite is in the red candles. The opening is in the high of the body, while the closing is in the low of the body. That opening and that closing levels depend on or represent a specific time frame. Let me back to the chart. As you see here, every candle represents 1 week. We can choose here if we want 1 day, if we want 4 hours, or whatever we want. 1 hour, everything we want. Let's say just in the week candle here, every candle represents 1 week. So the opening here, it was in the first day of the week, while the closing, it's in the last day in the week. The whole body, the whole candle, it's the moves of the price in the week. That's it. One thing is more important. It's about the time frame. The more time frame is bigger, the more the candles give us more certainty about the next moves. To be clear, when we see a green candle, for example, we see the opening here. Let me see. Let me back to this image to explain clearly. In a green candle, we see the opening here. Then the price dropped a little bit here. It's the week. Then it raised until here. It's the second week, to finally close at this level. The same thing in the red candles. It opens here, then it raises, it go up until this point, this level. Then it dropped down until this level, the low of the candle. Then he goes back to the closing, which is the low of the body of the candle. So for me, when I open the chart, as here, I see a war. It's a war between buyers and sellers. Look, just look with me here. Here, there is an uptrend, as you see here. From this point to here, there is an uptrend. Or here, there is a downtrend. From these levels to here. It means, for the uptrend, it means that the buyers dominate the market. In here, in downtrend, it means that the sellers dominate the market. For here, which means that the war is winning by the buyers or the sellers in a downtrend. But for me, where these candles gonna help us exactly is inside these moves, inside these fights between buyers and sellers. They're gonna tell us what is happening exactly. Let me explain. I will take an example. For example, let me see this candle. For example, as you see here, I will just show you a little bit. Let me see. Let me just to be clear, more clear. Here, this candle, this one, as you see here, it has a big wick, as you see. That means that at this level, sellers, they try to drop down the price until this level, but then at this point exactly, when the price dropped down until this level, to this point, let me just check a line. Let's put it here. Let me put it here. As you see, when the price dropped down until this level, the buyers get into the market to raise the price. As you see here, to raise the price, it goes back to these levels. Then in the next candle, we see a green candle, which means the buyers are winning, as you see here. So let me take another example. Let me see. In this, for example, in this uptrend here, as you see, we have green candles, but here we have a red one. Let me just check it exactly. We have green candles, but then we have a red one. We were in uptrend. This means that the buyers are dominated the market, but then we have this candle, which means that the sellers are in the market. Then we have Golflin, a red candle. That means the body of the next candle is bigger than the candle before. Then we have 3 red other candles, which means that here we have a reaction from the sellers, but it wasn't enough. It was too weak in front of the buyers. That's why the price say going up. Of course, there is many types of candles. I will explain some of them. As you see here, there's the bullish one, the bearish one. There is bullish engulfing, also bearish engulfing. It's the same. It's when we have second candle have big body from the first one. As you see here, we have what else? I will just try to share the important one. We have the hammer. It's when we go to a level, then we have a big wick. For example, a bullish hammer. Shooting star, it's when the candle it's bearish. For example, we have a big wick is up. That's it. We have also the doji. Here we have a bearish spinning top, 3 black cows or 3 white soldiers. It's when we have a big red candles, or we have a big 3 green candles. There is many types. You're gonna understand them. You're gonna learn them with the time. It's not our subject today. Just let me continue my explications. Just guys, of course our analytics won't be based only in candles. We will use many tools to do a good analytic of the market, but the candles are very important. They explain a lot and they could give us a very good point to get in or out the market. Let's take for example the line. As you see, it's just a line. It won't give us any type of informations. We can't see nothing here. It's just a line, not like the candles where everything is clear and where we can know exactly what happened. As you see, it's just a line represent the price in the time. That's all. Also, if we take the columns, let me open the columns. We see just columns. We don't see the opening. We don't see the closing. We don't know nothing. Just red columns and green ones. But here in the candles, you see exactly the opening. Here, the opening. Then you see that the price dropped down until this level. When we have a wick, then it raises up a little bit to close here. In the next one, you see the opening, then the price fell down until the same level. We're gonna explain these levels in the upcoming videos. Then raise up and close here. Let me take, for example, 4 hours chart. For example, let's take this one. We see a big engulfing green candle. The price opens here. Then raise up until this point. We see a small candles here, 1, 2, 3, 4, 5 small candles between red ones and green ones. They have a big wick, they don't have big wick, that's it. But then we see a very big engulfing red candle without a wick, which means that the price opens here, then he dropped down directly. We don't see any buyers try to raise up the price here, which means that the sellers have control in the market in the moment. Then it's confirmed by the second one. We see here a green candles, which means the buyers try to raise up the price at this level. Again, as you see, is the same level here in these 2 candles, but without any result. Then a big engulfing red candles again without any wick here in the up of the candles, which means the price dropped down directly from the opening to this level. In this one, we see that the price dropped down until this level. I will make a line here, but then the price didn't close here. Look, it go up until this point. It's about 1.8%. Then we see the closing. That it's a good sign that the buyers are here. The buyers gonna raise up, put the price up. That's what we get from Japanese candles. We're gonna just go here and read some articles about Japanese candles. We have Japanese candlesticks are a technical analysis tool that traders use to chart and analyze the price movements of securities. The concept of candlestick charting was developed by during routine trading. It's just informations. I will go down and see. We have how a Japanese candlesticks works. Japanese candlesticks provide more detailed and accurate information about price movements as compared to bar charts. As I said, they give us more information compared to the line or the columns or the other bar charts. They provide a graphical presentation of the supply and demand behind each time period's price action. As I explained, the opening, the closing. As you see here, I prefer the green and red. Here you see there is black and white. The colors are individuals. Everyone chooses the colors to use, which ones. Each candlestick includes a central portion that shows the distance between the open and the close of the security being traded. The area referred to as the body. The upper shadow is the price distance between the top of the body and the high for the trading period. As I explained everything here, just talking as I explained exactly. We have here a comparison between Japanese candlesticks and bar charts. Candlestick patterns. There is some explications of the types of the candles. We have here doji. It's the one that have a big wicks and small body. As you see here, the opening and the closing of the price, it's in the same level. We have also gravestone doji. As you see, this pattern resembles a gravestone, hence the name. It is formed when the open and the close occur at the low of the period. As you see, we have the opening and the closing are in the low of the candle. We see that the price opens here, then he raise up until this level, then he drop down at the same opening level to close there. We have dragonfly doji, it's the opposite. We have bearish engulfing pattern. It's when we have a big red candle. As you see here, it's a black candle. It represents negative candle. It's had a big body compared to the one before. Bullish engulfing pattern, it's the opposite. We have the hammer. As I said, the hammer, it's when we have a big wick. Let me see, the hammer pattern includes a long tail on its lower end and a near negligible upper shadow. It's when we have a long or a big wick in the lower of the candle. As I said, guys, remember, the candles are not the only tool that we use to have the information that we use to trade, that we use to get informations or to build our strategy. There is many other tools that we're gonna use. I'm just explaining here how to try to read candles. It's very important because there's many traders that don't take them seriously. It's very important to understand and to read, to know what they are telling us. That's it. See you in the next video. If you want me to explain something, or if you didn't get something, just let me know in the comments below. If you want me to talk about a topic or about something specific, just let me know. Don't forget to like the video, share it with your friends, subscribe. See you soon.